Bitcoin continues to trade sideways, and in this video, I want to discuss why I think Bitcoin to $17,000 makes the most sense. What's up, everyone? Welcome to Crypto Capital Venture. Hit that subscribe and like on the way in. Let's jump into this Bitcoin video. Check it out. Wow. Bitcoin right now, as I do this video, you can just see this red candle on the 6-hour chart. Interesting. I want to show a quick clip before we talk about this from yesterday. Now we have the swing low down here to that swing high, and we have our last support down here, confluent with this lower trend line. Right around our support area on the short term, everybody, is 18,800 or so, down to around 18,600. So that was yesterday's video. So this is really perfect timing to start this video. Let me take out that Fibonacci retracement and let's check out the 6-hour chart. So the swing low to the swing high, and you can see Bitcoin right now in the 6-hour. Let me zoom in. Trading below the 786 line, falling below the support area in the very short term, even as I do this video after. What's going to happen here with the 6 hours? I mean, is Bitcoin able to even come back up and close this 6-hour candle in this support area? Remember, in yesterday's video, I was talking about this is kind of that last short-term support for Bitcoin. This entire channel right here, this Fibonacci area, as Bitcoin has just been consolidating, and the direction of Bitcoin could be before our eyes right now as I do this video. And I want to discuss why I think $17,000 Bitcoin is more likely at this point. And I want to walk through the story that is played out on the screen. So the inverse head and shoulders, and I want to discuss this, has been in play, at least from my perspective. And you can see it here, left shoulder, head, and then right shoulder we've been waiting for. I know it's very messy, right? But there's a couple things I want to talk about. In the inverse head and shoulders, it's telling the story of bulls versus bears, right? The first move is a bearish swing low where the bulls step in and they say no. The second move is the bulls trying one more time, a little harder, and the bulls step in and they say no, right? Hitting the neckline once again. The third move is the bears trying once again, and the question is, can the bulls step in once again and say no, and we're going back to the neckline, we're going to confirm this, bears wear out, Bitcoin breaks out. That's the story of an inverse head and shoulders. Now, each of those three moves is a move of consolidation, and it doesn't always look pretty. So we had our first neckline touch, second neckline touch, third neckline. We're waiting for that fourth touch, and what we're waiting for is a trend, a new trend on the short term, and that is defined after consolidation. And you can just see this is the picture of consolidation in that potential right shoulder. There has been no right shoulder. There may never be a right shoulder, but we wait for consolidation. We wait for the confirmation of a trend, and we might be actually getting that very soon right now as I do this video. And so what we're really going to look for, once again, is the 6-hour candle. What happens here? Can the bulls step in and get a quick bounce back into this area with a crazy looking wick on the 6-hour? Time will tell. I want to go over here. This is the 4-hour chart, and this is a kind of a defining moment for Bitcoin. We know that Bitcoin actually broke through the 74% to the apex of this triangle, which we discussed. It happened perfectly, but it was so unconvincing, and I talked about that in yesterday's video. There was like no separation from this trend line, even though Bitcoin broke the trend line. It was very underwhelming. And the same thing recently, we got the break below the lower trend line, right? Again, when I charted this before I was getting ready to start this video, I typed unconvincing. But as I'm doing this video, it potentially is becoming more convincing. And now we're starting to get potentially some short-term confirmations of the direction of Bitcoin. And this is what it looks like. I'm finally doing a video where it's happening. But again, we have to see how the 6-hour candle closes and what happens. But you can already see from the swing low here to the swing high here, down to that Fibonacci area we discussed, Bitcoin is below that support area. This consolidation phase that has happened, right, being squeezed into this area between lower highs, so swing high, lower high, and then higher lows, low, higher low, higher low, that could potentially be ending, right? That squeezing that has been happening, and it's happening potentially right now, $18,460. So I know it's nothing crazy, but we're testing the lower trend line we just broke out of. So the $17,000 target that I'm doing this video on becoming a little bit more potentially true to happen. So that's what we're looking at right now in the short-term chart. $18,350 as I do this video now. Okay. I want to stay on course though. I want to talk about the reason why 17,000 makes most sense now that we're doing this video. This is why. Not only do we have that pattern target, which we just talked about, the symmetrical triangle. Remember, it's not just upside, right? We had the $21,000 target, but we also had that $17,000 area, $17,100 area for Bitcoin. It's in play. That's number one. Bitcoin's at $18,200 now. Now, the other part of this is we have a short-term Fibonacci in play, and that is this previous swing low that we had in November 25th, it looks like, to the previous swing high that we just had, almost breaking 20,000. And if we zoom in here, I'm going to zoom in so we can see this. This is a daily chart. You can see the ugly daily candle right now happening. I guess this is probably more... This is obviously a short-term Fibonacci retracement, but this could end up being a mid-term type of consolidation. But what we're looking at is this area, and this is 17,006 to 17,000. Remember, these Fibonacci retracement areas are so crucial when Bitcoin needs consolidation on any time frame. That's why there's always so many Fibonacci retracements that I'm discussing on every chart. But this is what it looks like, and when it's confluent. And you can see the 786 line right around 17,000 is perfectly confluent with the breakout target of the symmetrical triangle. When you have that confluence, those areas make sense. And then when you start going to the weekly chart, and here's the weekly, and when we're overbought and we're getting that rejection on that RSI that we've just been waiting for, I've been talking about it. You know, when Bitcoin was kind of on its way up to this yellow line, I had it charted. I talked about, be careful, everybody. Bitcoin is approaching that historical area on average where there's resistance. And look how perfectly Bitcoin has hit that resistance. And so right now we've gotten that bounce on this weekly chart. You can see even in real time, the RSI actually moving to the downside after this rejection. And we're going to just continue to track that. But long story short, we needed some consolidation here. If you want continuation for Bitcoin, right? This is Bitcoin. In the last bull market, this is what it looks like. This was all bullish, this entire area, but the RSI, you can see, takes these breaks where it comes down. We're going to need similar moves like that for Bitcoin, and this is potentially what it's looking like now in the short-term charts. Whether Bitcoin bounces off of where it is right now and then just continues sideways, that's going to allow the weekly to cool off, the weekly RSI here to cool off, to settle down, or if Bitcoin really comes down to $17,000 target, say, that's going to allow Bitcoin on the RSI to come back down even more for continuation to the upside, right? Don't know an exact level, but potentially around the 60 area, if the weekly RSI comes down, could set up Bitcoin to kind of cruise back up going into 2021, really the first half of 2021. That could be the time when we're seeing Bitcoin just going crazy. And a lot of people are anticipating that. But again, it all starts in this area of consolidation for Bitcoin. And what this looks like, nobody knows. That's why I'm here. I'm tracking these things all the time, every day as we get these new setups. So what would a setup here look like? I do not know. One thing I can tell you, if you zoom out on the charts, back in May of 2020, there was kind of the similar move in terms of Bitcoin. It was becoming overbought, obviously, on this daily chart. You can see the RSI here, overbought territory, right about where it's been recently in overbought territory. But what it did was it had a pretty, red few days. Let's take out our Fibonacci right here, red few days, and we'll take that swing low to that swing high that it had, right? And it bounced right off of this Fibonacci retracement, and that was the first area of consolidation on the midterm chart. And you can see for over a month or so, it just consolidated. That could be what's happening now. Bitcoin, and in this case, just to give you an idea, this $17,000 786 line would be the same as this $8,400 area at this 786 line back then, right? That's what that's looking like. So, and after that, you can just see Bitcoin traded sideways. So we could have another thing where Bitcoin just trades sideways for the next month or going into early 2021. That's potentially in play. I'm not going to sit here and tell you what's going to happen, everybody, but now I will tell you, this is why I do technical analysis, because my buy zones are now in play. And so 2 buy zones for me, and I'm just going to be completely transparent with you. $17,000. It's an accumulation area for me. It's a target to the downside based on technical analysis. It's on this chart, it's 4-hour chart. We've been tracking symmetrical triangle breakout, 17,000. More of a lighter buy for me because on the weekly chart, we know historically there is so much evidence. And the 20-week moving average, this green line, is being pulled up, and that's good. But a lot of evidence to suggest Bitcoin can very much revisit that 20-week moving average. Currently, that is sitting just below $14,000 and at a very critical Fibonacci support area on the macro now. That is 13,700 to right around $12,000. Now, that's the swing low that we had back in August to our most previous swing high and back down for consolidation. That's a macro consolidation setup. I don't think we're going to go that low. Right now, as I mentioned, 20-week moving average is sitting around 13,500. That's probably going to continue to move up even in the coming days, even above probably this Fibonacci retracement. I don't think we'll touch down that low, but it could very well be in the $15,000 range, depending on where the 20-week moving average gets pulled up to, right? So always be mindful of those areas. Those are the heavy buy zones for me in a bullish environment. And remember, to me, we are in the bull market now. That is a bullish buy. That is a buy the dip scenario in a bull market. And that's what it looks like. So this is what I'm watching, everybody. Bitcoin right now around $18,250 or so. And really interesting to watch these charts right now play out. It's going to be really interesting to see how this ends up after I upload this video. But time will tell. I don't know if we're going to get that bounce into the Fibonacci retracement back into this area when I started this video. But it's going to be really interesting. Bitcoin on its way potentially to a $17,000 target. Time will tell. Let's track it. Let's watch it. Be prepared for every scenario. Everybody, I appreciate you. I'll see you in the next video. Hit that subscribe, hit that like, go download Block Gains Crypto Tracker app. Set your sells, plan your exits, plan your profits. I'll see you in the next video. God bless.